Alright, so pretty interesting day. You know. So let's look here real quick. 60-minute chart, you can see we've been selling off for a few days. Daily chart. Sideways for a while. Tried to break out below, failed. And got another push up. Probably going to, this breakout's probably going to fail. We'll probably get down into here and eventually we'll test back down. I want to focus more on today's price action now. So past few days, I'm going to briefly go over all the ways in. I'll just start with last week real quick. So last Friday, 5 above bar 1. I would not get out here, but if you get out here, you got to get long again. Maybe bears get out here, double top bear, double top, lower high, major trend reversal, or higher high. But if they do, they get long again. Maybe they get out here, but again, same problem, get long again. I'd get out below one of these bear bars. We're developing a very tight trading range, so there's nothing wrong with just getting out. And as far as wouldn't buy here, probably 2 legs down. Micro channel, first left should fail. Bulls buy again here. They probably get out here or somewhere in here. Always in short, maybe buy this bar, but clearly always in short here. But you have to understand, bad follow through, probably more of a trading range, maybe a trending trading range. By the way, trending trading range days are basically the same thing as a broad channel. And I'll just, so sideways, small bear breakout, depending on how you want to draw it. It is a bear channel. Obviously, that's not the most perfect line. I draw it. It doesn't really matter, but it's just a really flat channel. Arguably a wedge, 3 pushes down. I think bears get out, and bears, aggressive bulls buy, but bears have to sell again. They probably sell here or one of these bars. About a 6 bar micro channel, 7 bar micro channel. First left should fail, and we got a second leg down. In here, really no convincing reason to buy, to go long. The bears are holding below the moving average. The bulls cannot get a breakout, and they're failing to get a decent buy signal. Tight trading range, best to wait for the breakout. And then we got, arguably this is the final flag. We got the bear breakout, and at that moment, you kind of have a high probability situation. And what I mean by that is, this happened a lot. I'll point out a few. Reasonable stop entry buy, double bottom, you can call it a higher low major trend reversal, bear trend line break, and a test of the low. If you buy this high, maybe you risk, I don't know. I never take this kind of trades, but plenty of people do because they're targets. Maybe, I guess this is kind of how I do it if I was going to take this trade. This type, you buy above here. Some traders, they just get out below this bar. They get out maybe below here. Others will buy here, put a stop way down here, and look to buy more lower. And you can see bulls who bought here, they add on somewhere down here, and they get out at the original entry, which is exactly what happened. That's why there were so many eager to get out at the end of the day that price didn't even. They had to set their target a tick or two below their first entry, 1 tick above this bar. That happens a lot. And that's partially why final flags work. Let me scroll through. We had a couple last week. Yeah, okay, here's one. So, bear trend, arguably a minor reversal. Enough, 5 bars up or so, 5 bars down. It's a lower low major trend reversal, but we've yet to break above the moving average, so probably a minor reversal. Same thing though. Maybe if I'm a bull, I think, okay, I'll buy above here, put a stop somewhere down here, and I'll look to buy more lower. Well, sideways enough bars will probably get back to this high, so if I buy more down here, arguably above this bar, it's a very high probability scalp. It's better, in my opinion, to just, if I bought above here, I'd get out below this bar, and I'd prefer to go short below it, and then look to buy somewhere down here, betting that we get back in this range. That happened, I believe, yesterday as well. Yeah, so, trending trading range day, and this is what I mean by trending trading range day. Sideways, bear breakout, more sideways. But when you look at the end of the day, you say, yeah, it's a bear channel. You can draw like that. I think it's better. It's more clear like this, a bear channel over the past couple days. And you can see basically what we had. But anyways, it's a trending trading range move. You went down, sideways, and more down. But it's reasonable in this day. A lot of times, I think Al mentioned this, when you go sideways, very often price will, if you get a strong enough breakout, it'll come close to closing this and go sideways and get another breakout. At that point, the probability is really, really high that we're going to at least get above this low and probably up higher because of the trending trading range nature. Arguably the breakout was here, and we closed the gap up here. But anyways, reasonable to buy here, somewhere in here. Use the wide stop. What's wide? Probably some sort of measured move of these bars. Maybe at a minimum, you need it well beyond, and you can see that's probably what I do, because even leg 1, leg 2, it's not high enough. So it's the same thing. Bulls will buy in here, scaling lower, scalp out at their original entry. You can see even buying here or over here, bulls got out. But anyways, I don't want to get too carried away with that. Always in on this day. I think oh yeah. So always in short here, minor reversal. I think it's okay. Bears get out. They have to sell again here, but again, bunch of bear bars down, probably minor reversal. If the bears get out, they got to get short again below this bar. And what do they do down here? Really, really difficult. But arguably, there's never a good stop entry buy, so certainly okay to hold short. I think bears get out somewhere down here because we're going to probably close this gap and test into this range. So maybe they get out. Kind of aggressive to go long, but I think it's the only other option. It'd be long or flat here. Now, this day, the 9th, it's a stop entry buy above 1. Minor follow through, so probably at least a little more up. And you can see this is the warning right here. This was I'm sure this is a crude oil report. Let me see, August the 8th at 9:05. You can see, by the way, crude oil, this is one of the days where you just buy at the market, and if you heard Al, you just buy and you just hold and you wait for this, and you look to take profits. Yeah, but let's go back to the 8th real quick. Or excuse me, the 9th. Yeah, so here, my guess is this was the crude oil. We had a report that day. I believe that was the 9th Wednesday? Yeah, there's Tuesday. I can't remember. I think it's either Tuesday or Wednesday, but it always has the crude oil report. So yeah, anyways, I think bulls buy probably buyers below, maybe this low, definitely this low. Still stop below here. And this is a warning. Bears made money selling below. So we're probably going, we're going to probably develop a trading range soon. Where the bull, I think bears get out below here, if not below here, or somewhere on the sell-off, maybe this close. Bears go short here. And no compelling reason to get out. And here, enough of a sell-off that bulls need at least a micro double bottom. What do? Do they get out here? Maybe. Or maybe here, but if they do, they got to get short again. I think bears get out, bulls get long for the same reasons I've been talking about. We're going to probably close this gap, and we may test all the way back up to here. And this is what I'm talking about. Very often you get, trending trading range. So bear breakout sideways, bear breakout, and price touches the gap to the tick, but doesn't close it. And then we close it later in the day. It's also right at the open of the day, so you have to think at this point consecutive sell climaxes here, here, here. It's a wedge bottom. It's a so you have to think we may test the open of the day since this is a lot of trading range price action. And yeah, that's all I'm going to say about that. And then we're always in long until the close. So this day, a little more tricky. Bars 1 and 2. 2 is very important. The only thing I do below 1 is sell. And what do you do with 2? Do you get out? It's always tricky. I don't think you do. And there's nothing wrong with just getting out because it's unclear. But one of my big thoughts is, okay, fair channel, bull breakout, decent sell at the end of the day, not a strong of a rally. At the top of the channel, we may have to test down. So, I would not go long above this bar. The only question is, do you get out of, well, excuse me, there we go, TradeStation froze for a second. If you go short, the only thing is, question on your mind is, do you get out of longs, And, I think it's okay to hold short. So you either get out of shorts above or you hold short. And then I think bulls get out above this bar or this bar. I don't think they go long. And, do you go short here? Maybe. But if you do, I think you get out of shorts here. So, and you can see if you did that, this may be a point. And I think bears sell somewhere in here. And bears get out the latest above this bar, maybe above here, one of these bars. Strong enough breakout for at least the second leg. And if you're a bear, you've got to get short again. Do you short here? Maybe. Maybe you short this bear breakout. I would not short down here. But you got to look to get short somewhere in here, maybe below this bar. Betting on another leg down. And we got our second leg down. And again, bears get out, bulls get long. Betting that we test back in this range. Maybe to the top of the range. Today, it's always in short. Maybe always in long. I would never buy that or buy above it. Too big of a tail. Maybe you get short below, or you wait to sell 9 o'clock. But bad follow through 9:05. So, bears get out above this bar. Aggressive bulls buy, or they wait for the third or fourth consecutive bull bar on one of these. Strong enough breakout for at least the second leg. Let the stops a little bit down here. And tricky up here. I think bulls, maybe they get out here, maybe they get out below 10.55 or below 11.15, but if they do, they've got to get long and probably above this bar, probably above here or above here, but if they do, I think they get out below 12.15 and they buy again above 12.45. Never went strong. It was never strong enough to context of short. We're failing at the moving average. We're failing to break below the moving average. Bulls get long again above 1245, but if they do, I think they got to get out below this bar. Probably below here, maybe below here at 1330, or right at 1355. And the reason why, especially there, is because we're failing to trap by the closed bulls. So let me catch your breath real quick. Sorry. Anyways, big bear breakout, but as you can see, weak close increases the chances it may fail. It's similar, reminded me a lot of last Friday here. Obviously much stronger trend, but we rallied, sold off, rallied again, went sideways for a long time. Tried to break out, but very big tail. When you get situations like this, you really have to be careful because you have to think about what happened. A lot of bears, you had so many eager bears that they just scalped out. So it's a warning that it's probably going to go more sideways tough. And bulls did not get a good signal bar. We had to go sideways for a little bit. Got a low one short. It failed. Arguably a high 2 buy, and we tested the high of the day. So again, I wouldn't go short at all today. Trading always in. Do you buy above this bar? Tricky to buy above 1410. Strong enough you may get a second leg down. Probably better to buy above 1405. But again, there's a reason why there's not good setups. The signal bars aren't good. It's forcing you to risk, a lot compared to the tightness of the trading range. And you can see, even though we rallied up to a new high, it wasn't strong. And, if you were not quick to get out, you took a beating. You probably got stopped out here. So regardless of what I was doing, swing trading or not, if I was long, I'd get out 6 ticks below this bar, or I'd get out 1 tick below this bar. So what I mean by that is, if this bar would have gone 6 ticks below this bar, I would have exited. But since it didn't, I'm definitely getting out below bear bar, especially closing when it's low. It's not strong enough of a rally to hold. So that's that with always in. By the way, I'll be doing the webinars again sometime, probably Monday of next week. So, but for now, I'm just going to be simply recording videos and just posting them. But I'll be back to doing the live webinars next week. Let's see here. Just things to notice. So, gap up, yes. And you can see a lot of traders who bought this close were disappointed, got out 1 tick above, price sold off. It's really a breakout pullback buy. So, I know this seems strong, but you have to understand the bad follow through. That happened last week. If I can find it. Here it is. Yeah, so not really gap up, but we sold off, bad follow through, sold off again. So it's 2 legs down. Leg 1, pull back, leg 2. So technically it's a high 2 buy at the moving average. So and a gap up, a trend up. So bears definitely get out. When you see this many bear bars, when you see this many bull bars, you just buy at the market. When you see this, there's going to be a second leg up. So buy at the market, put your stop down here, confident that you'll at least get a second leg up. If you got out below here, I would not. You buy again above 1020. At some point, swing trading becomes difficult. You get out below and you're just getting all this choppy price action. When the range gets really tight, I would be leery of. I'd stop trading swings. It's really, really dangerous. You can see if you short, you get out of shorts below here. you buy again above here, then what do you do? Maybe you get out again. You know, it's just really easy. Although you bought here, I think that's okay. Wedge bottom triangle at the moving average. The biggest issue with buying above this bar is we may get down in the moving average. So if you buy above here, you don't get out below here. You get out somewhere down here. The worst thing you can do is buy, get out, buy. It's okay to get out here, but you can see kind of like this example. So if you went long here, low too short, get out below bear bar, I think that's fine. But then the very next bar is a bull bar closing when it's high, but it's a high one buy. If you think about it at the moving average, at the high of the day. So that's not a strong enough rally to take that trade. And I just wouldn't do that. And you can see, look what happened. Bull spot here, it hit their entry price, which was the high close of the day, and turned down. So they were still trapped. But it let them out at the end of the day. And for always then, if you have the energy, maybe it goes short below this bar. And if you did that, you'd make a few points. So, that's it for at least the Emini. Let me see what else. Decent move in bonds. Just look at this. It's tight channel down. I know it looks choppy, but that's just how bonds kind of look. But it all acts the same. You're getting gaps, gap, gap. We closed this gap, so we're starting to close gaps. But again, there's got to be some sort of big trend line break. Even here you're thinking, okay, exhaustion, but strong enough down for at least a second leg, two-legged pullback. So if a bear was short, let's just take it from here. Let's say you sold this close stop up here, which I think is fine. No compelling reason to get out. Do you get out here? No, I would not. Tight enough channel down, I still wouldn't get out. High to buy, and I probably wouldn't get out either. I don't want to see a breakout at above the moving average. Strong sell-off. You think, okay, climax. We may test this high, maybe this high. I'll get out above this bar. I wouldn't buy. Well, I say that if I did buy, I'd get out below the low too short of the moving average. Strong enough sell. Bear breakout, make it a second leg, which what happened. However, then we got about a 5-bar micro channel down, so make it a little more down. Wedge bottom, 1, 2, 3. Okay, bull bar. I'd get out of shorts below this bar and consider going long. And you can see what happened here. It's very interesting. So traders who sold the low close at 13.50 at 20.32. I know there's a correct way to say it, but it's I'm not going to be proper about it. 171.20.32 or 20.30 seconds if you want to get technical. Traders who sold that close, this low only went to 171.20.30 seconds. So what happened there? You have trapped sell the close bears who are going to be very frantic to get out. And kind of a wedge, and then we sold off. But again, you had so many trapped sell the close bears. You had so many bears in a hurry to get out that they put their limit orders a few ticks above this close and got out here. And another reason to get out and not sell down here, especially to get out of shorts above this bar, is right here. It's a reasonable buy. Maybe stop placement's always tricky. At a minimum, probably need to stop a measured move down from this high to this low. Maybe this close. But regardless, use the wide stop you buy more higher, and you can get out. So that's all I have. Hope everyone has a great night.